Very shortly, Bitcoin is going to make history because it is about to close its 9th weekly candle in a row in the red. Let's count this here, right here. Take a look. 1, 2, 3, 4, 5, 6, 7, 8, 9 weekly candles in a row that we are looking at closing red right here in this market, which is quite frankly hard to believe, right? I mean, Bitcoin has never done this before. I've shown you this in a recent video, and if you're subscribed, you're going to know all about it. So shout out to those of you who are engaging with this YouTube channel. You already know that I love you all very, very much. You know, this hasn't happened before, right? We came close with certain occasions, candles like right here. I think this was 4. This might have been like 5 or 6. We spoke about this recently on the YouTube channel, but we've now made history already by setting 8 weekly candles going down, and we're on number 9 right now. And again, you know, look, the fact that this is happening pretty close to a support level, there's a lot of factors here that I don't want to be ignoring, guys. I mean, sentiment is so weak. I was talking about this yesterday. We're not able to push above a reading of 14 right here. Look, the highest reading we got was 8 days ago. Well, 8 days ago in my time zone now. I'm in Europe, by the way. I'm out of the US. That's amazing as usual. And yeah, with a reading of 14, this definitely, I mean, look, we're just not punching high. People are not happy with the market right now. And again, at a time like this, to me, when we're at a support level and, you know, a lot of these bearish indicators that we've been watching are kind of leveling out a little bit, and Bitcoin really is kind of trying to tease that upside right now, right? We were talking about this wedge before, and look, I know that I haven't drawn this perfectly. There's a few different ways you can draw it. It's not actually a perfect wedge, to be honest, right? It's not the easiest thing to draw in the world, but bottom line, no matter how you draw it, we're either getting very close to breaking out, or, you know, we've already kind of broken out a little bit. I'm happy to draw it right here. I think this is quite a reasonable kind of way to draw this wedge resistance. And so yeah, we're not quite there yet, but we are pushing up, and we're pushing up at a time where, you know, there's just so many things showing me that it makes sense to break down. Now the issue is that if we don't manage to break down, then of course we could be looking at quite a steep drop, right? I mean, you know, our next support area is down here, kind of around this $26,000 area. And just to remind you guys how this came about, because it's really not very much at all, it's literally just this consolidation right here. If I replay the chart to this level and slap on the 4-hour time frame, you can see that Bitcoin had a very small amount of consolidation at this price area when, let me zoom out, when Bitcoin, oh my bad, I've messed this up. When Bitcoin initially managed to break out above $20,000, right? Just to put this in perspective, this is the coronavirus market crash. This is the rally up to 12, the drop to 9.8 or whatever, and then the subsequent rally past the all-time high. We consolidated in 2 areas, and this is a weak one, right? So again, you know, I would have to look at potentially dropping much lower down into perhaps this range, which stretches between 22 to 24,000, and failing that, of course, everybody's wet dream, $20,000. And to be honest, I think a lot of people are, I'm hearing sentiment like BitBoy just put this out today, guys, you have to be prepared for the 85% drop down to $10,000. And my first reaction was, this is fucking crazy. My second reaction was, actually, he's right though. And my third reaction was, look at all of the YouTubers right now that were previously so damn bullish. BitBoy is someone that I would consider generally to be way more on the bullish side than on the, you know, any other side. But when you start hearing people say stuff like that, you know, the thing I want to remind you guys about is, look, the best time to be selling Bitcoin was at any point like over the past few months before now, right? You know, we're already down from this all-time high quite substantially. Let's actually put this into perspective. From this high down to our current price, we're down by 57%, and down to our low by 63%, right? This is quite a big drop, and the difference between a 50% drop and a 57% drop is bloody enormous, right? If we fall down by 50%, we're down at $34,000. So fall by that next 7%, we actually from that level need to lose double that amount. We need to lose 14%. So this gives you an idea just again of how much blood we're actually seeing in the market, right? Again, if we measure this from the top down to say, let's say this swing low right here at 42, this was a 38% drop. To get from there to where we are right now, we've suffered another 30% drop, right? When you put these numbers into perspective that way, it makes a lot more sense, because if you're just measuring the, you know, the absolute high to the absolute low, well, you can only fall by a maximum of 100%. But, you know, when you look at the actual damage that's being done from each of our highs, it's still very, very intense. And so again, when we start seeing this kind of sentiment now, like, I almost feel like it's a little bit too little, a little bit too late, right? We always see people turning very, very just overwhelmingly bearish at times like this, and it influences people to do things that, you know, are quite, you know, driven out of fear, right? This is something that this market is dominated by right now, where people are massively driven by fear. And on that note, you guys already know the deal. I'm out with Bybit right here in Monaco. I got to pull up their website. This is the only exchange I trade on. It's the only exchange I've been using for years pretty much. And if you want to sign up to them and use their platform, this is by far the most secure, safe, reliable, stable platform that I've used in the crypto space, and I'm pretty sure I've used all of the major ones and worked with all of the major ones, and I'm super happy with Bybit. These guys have smashed it out of the park. Just serial good decision makers is the title I'm going to give them. They've got a long list of altcoins and so on. Huge derivatives platform. You guys know this is the only trading that I do. Look at their inverse perpetuals. There's a lot going on here, and their USDT perpetuals is literally mind-blowing with this list. I don't even want to list off the names here. They've even got Monero. That's impressive. So if you want to sign up to Bybit, the thing is, you're going to get some extra free cash deposited into your account as a thank you for using my sign-up link down below. And if that sounds interesting to you, then all you need to do is sign up using my link in the description down below and make your first deposit. So go ahead and do that if you like getting free money. You don't have to do anything with that free money, but of course it's yours. You can trade with it. You can do whatever you like. If you make any profits, you get to keep it. So it is basically free money. And at a time like this, when people are potentially being driven to the edge with their feelings, with their fears, their emotions, obviously it's going to be hard to resist that, right? Fear is a much stronger emotion than perhaps anything that humans are able to experience. I think fear probably is right at the top. And so it makes it way harder than navigating, for example, greed as a trader. But if you can, the beautiful thing about bear markets, and I just want to remind you guys about this, we do talk about this somewhat regularly on this YouTube channel, but of course, if you're not subscribed, if you're not engaging with this content by hitting up the likes and so on, you're probably not going to see these in your recommended boxes. So if you want to see more of these, more of this kind of content, make sure you go ahead and smash up those likes, because the thing that I want to remind you guys about in these markets right here is that we have predefined support levels when we're trending downwards, right? This is the beauty of a bear market. Obviously, overall, bear markets are going to be harder to trade than bull markets, but with the right perspectives, the right skills, the right strategies, which of course we're putting forward inside of VIP, how I feel I've come to those strategies, skills, and so on. You can watch all of that happening in real time, plus the reasoning behind every single small decision that I make, so you get a very, very good in-depth view into what trading for me looks like. You know, the thing is we have predefined support levels, right? And that's not a luxury that we have when we're in what's called price discovery mode, where we haven't, you know, traded at each of these levels yet before, so we didn't know where we would expect to find support or resistance or anything like that. But we have that luxury now. We know that there's not going to be much support between 20 and 30, purely because there's basically no price action that happened there, right? We zipped all the way up within less than 3 weeks, and you know, it's actually very, very fast if we zoom in even further, and so, you know, that tells us we're probably not going to be able to expect much support over here, but that we might be able to expect a little bit of resistance moving up. And so these kind of things allow us to position ourselves to be trading a little bit better. And I just want to expand on that note really quickly, because what I'm seeing right here is, again, just this big resistance range, right? And now the thing is because we've basically been consolidating for, you know, what is at this point 20 days, I mean, coming up to a month, ladies and gents, you know, Bitcoin is really putting us through it at the moment. You know, because it's been such a long area of consolidation. Well, the last time we had something that I would consider to be quite a long area of, you know, relatively dead price action was around over here, and we were trending down. We fell from a high of about 43.3 down to a low of about 37.6, and that was a minus 13% drop. So there was definitely, you know, some price action happening there, but, you know, compared to the volatility of before, right? I mean, this was a 23-day range, but if you look at this right here, this was actually only a 13-day range, and we had an even bigger drop. And then, of course, after that, it was only a few days. It was only a week, and we had a significantly bigger drop, right? So it's safe to say that this area, and I can actually demonstrate this a little bit more clearly on a chart where I don't have any drawings. In my opinion, just what I like to do is I like to map out these areas of, what I would call high volatility, and then low volatility, and then high volatility right here, and then low. I'm obviously doing this very rushed. It's not very accurate, but the thing is yeah, I don't expect this to last forever, and so I have to expect that we are going to be getting that kind of breakout relatively soon. It is the markets just can't keep being like this forever, and again, when we look at where the money is in the market and how fearful people are, again, like fuck me, I just don't like being bearish when we're down by like minus 57%. It's just generally not a good idea. Just as a trader, as an analyst, somebody that's been in these markets now for 5 years, and for 5 years in crypto, that's quite a long time. I feel like I've seen quite a bit. It's just when everybody and their nan, especially these YouTubers that are, and no shade to BitBoy, I've never spoken to him, but I'm sure he's a very cool guy. He's obviously super talented to have what he has and to have built what he's built. But bottom line, those of you who know him, you're gonna know it's not a channel like this. It's not a channel like the kind of channels you guys are watching, right? BitBoy and the other very, very big YouTubers, they're much more mass market. They're appealing to people that, let's face it, are just not the most skillful of traders, and that's totally fine, right? But if we're starting to see every character like that talking about how the market is going to continue dropping down, and they're not even saying it when we're at a resistance level, like this is, well, to be fair, 30,000 is a resistance level, but they're not saying it when we've had a bit of a rally up. They're saying it when we're at a swing low. We're at a swing low, ladies and gents. If we don't count this wick, this is a brand new low for this market cycle that started at $68,000, $69,000. And I just don't want to ignore that. I just don't want to be like, like the other guys that are kind of ignoring the fact that we haven't even seen a relief rally, that we're down by minus 57%, that, so many different indicators are showing us just obscene levels. I mean, look at these last 3 months. Look at this last 1 month. It's just completely printed these low levels right here with absolutely no remorse. Again, we zoom out to 3 months and we're not even getting above neutral territory, really. This market just hasn't seen any sort of real move to the upside in terms of sentiment really over these last 90 days and definitely over the last month. And when you look at how long this goes on for, again, when you consider that we're starting to get people really just giving up, ladies and gents, just absolutely giving up, talking about very, very bearish price targets. And again, I mean, it's because we've had these weekly candles, right? I mean, 9 weekly candles in a row. And of course, it hasn't closed yet, right? Anything can happen. It's Bitcoin. There's 90 minutes left. I don't want to act like, we know for sure that Bitcoin is going to continue dropping. But, what I do know, I think with a little bit of certainty is that, when we pull stuff like this in these markets, I don't want to be... I don't want to be so sure that we're going to keep dropping, forever. It's, and the thing is that there's one big catch here, right? Is that the equities market, if we look at the indices, for example, I mean, they're up, right? They're in a bit of a reaction rally, but I was warning about this on the YouTube channel. This is a resistance level. Let's face it, ladies and gents, this is a resistance level. This is where the S&P 500 was able to find a little bit of support. It's now, potentially turning into resistance. It was resistance when we were first encountering this level in, Q2 of 2021, April, May kind of time. We were finding a little bit of resistance right here. And so naturally, we have to expect resistance in this range again. This market isn't open right now. It's going to open actually in about a day and a half. Oh, sorry about that. It's going to open in a little bit of time because obviously we're just coming out of the weekend. But at the same time, I mean, we have seen the dollar, drop by quite a bit, right? So it does make sense that, I mean, if we zoom out right here, and this is the kind of macroeconomic analysis that I am trying to bring a little bit more into this YouTube channel. If you do appreciate that, then do me a favor and smash up the likes on this YouTube video. I would really, really appreciate that if you had the time to do so. But, one of the things I have been talking about on this YouTube channel, and by the way, let me know in the comments as well if you want to see it, see more of this kind of, just me stringing in what's going on in the real world with the dollar and so on. But what we are seeing here is potentially the beginning of these big drops down. And if this is the beginning of these big drops down, then you need to brush up your contacts list, make sure you've got the number of that captain that's going to get you the yacht with all the beautiful Russian models, because this is going to be your year if the dollar keeps dropping down. If you don't already know what I'm talking about, then let me bring this tool up and overlay the Bitcoin chart. And I just want to, can I put this on the logarithmic scale? 1 second. I don't know how to do that, so unfortunately I can't. But we don't need that. We don't need that. What I want to draw your attention to right here is you know, just generally what's been happening with Bitcoin when the dollar started to collapse, right? So again, I've already demonstrated this quite a few times, but you know, for those of you who did miss it, it's definitely well worth seeing. So if we take a look at this and show you where we're at right now, I mean, the previous couple of times that this happened over this last decade, over this last, like, I don't know, 5 to 6 years, you can see that Bitcoin managed to, when the dollar started to collapse on this dollar index, Bitcoin managed to shoot all the way up. It was basically when Bitcoin came out of this bear market. Now, just to put this in perspective, we're focusing on the yellow line, I'm sorry, on the orange line right here. This move right here was when Bitcoin rallied up to $1,000. Look at the price level, $1,000 for the first time. It then dropped down to 200, and it was rallying up, and it only got the breakout when the dollar managed to top out. That was the first time. And then, of course, you can see as the dollar was dropping down, look at where it peaked, right? Bitcoin ended up peaking just a few days, I'd say a week or so before the dollar ended up reaching its low. We can actually move this line a little bit. And so you're starting to get the picture now. It's the very same deal right here. When did this top happen for the dollar? Bam, in March of 2020. So if you've been paying attention to the world events over the last couple of years, you're going to know that that's when the coronavirus pandemic really took hold of the West specifically. And that is also where Bitcoin started to rally up. The dollar was crashing and crashing and crashing and crashing and crashing. And what happened to Bitcoin? Well, just about a week or a few weeks after, a month or so, whatever, a relatively short period of time is all we need to care about. You know, that's where Bitcoin reached its high, you know, at $65,000. So again, you know, it's got a very good inverse correlation. I know that a lot of people, even people that I respect, say that it doesn't. I don't know what they're seeing. Honestly, it confuses me. You know, it's pretty damn obvious to me that there is a huge inverse correlation here. And if the dollar is about to trigger one of these moves again, and you know what? I mean, it's kind of following the similar pattern that it usually does, right? When it does top out, the dollar tops out pretty quickly. It doesn't usually, you know, hang around at resistance levels and then drop down. No, it's usually there and then bam, you're down the very next week or the next few weeks, right? You can take a look at how the dollar has interacted with these resistance levels again as well. You know, it generally doesn't mess around too much, and it does like to drop down quickly, right? Every single time. Look at this. We didn't even manage to close a weekly candle up here. Now, this was a major exception, and that's the thing, right? If we manage to have this much strength, well, then actually I'm going to start asking questions like, can the dollar keep going up? You know, it obviously managed to break this resistance level, and it's cleared it by quite a big amount. You know, I mean, this is the dollar index, let's keep in mind, right? I mean, this isn't some random penny stock or something. And so for the dollar index to pull a 1.35% breakout, I think is pretty impressive. If we measure it from this high right here to pull a 2% breakout, this is no small deal. So I think we very well could be looking at one of these staircase patterns as well. And I'm not ruling that out, you know, something a little bit like this, perhaps until the dollar really does break out. I don't know. But the thing is, I'm still leaning towards the dollar dropping, even though all of this is happening. Again, the only thing that's concerning me is, and I do have to bring this to your attention, is if we do look at these indices, it's the same with the NASDAQ as well and so on, is that, you know, these indices, they are at resistance areas. They've obviously been trending up a little bit too aggressively. You know, if you compare how the S&P 500 has been, you know, making its moves up, you can see it's very clearly, it's very visibly. Let me show you this on the SPY so that I... is there a different one I can use? Because I want to keep a clean chart. Yeah, this is more or less the same chart. Nope, got to use something else. Bear with me. Well, okay, we'll just use the same one. Here we go. Okay, this is easy. This is easy. So if I just draw a couple of lines, you know, to show you the kind of strength that the S&P 500 has been trending up with, you know, I mean, this is pretty, you know, I don't think there's much for me to say here. If I hide these candles right here, my God, I'm forgetting how to do everything today. To be fair, I always forget how to do this because I keep bloody moving it. Yeah, I'm lost here. Maybe if I double tap on this, No, it's the same thing. Yeah, I'm sorry, I can't show this to you. But, you know, bottom line, I think it's pretty clear. You know, I mean, this chart is getting more and more aggressive, right? And so, is it due for a major correction? Well, again, it's the same thing. Everybody and then Nan is expecting a major breakout in the market, and again, when that's happening and the market's already at lows, yeah, I just don't see it happening. I just don't see it happening yet. I might be totally wrong. I'm absolutely willing to accept that, but you know, so far that's what I'm thinking. Now, the issue here is that we haven't managed to capture good support, in my opinion. I'm wondering if we've seen any moving averages yet. Wow, no, we even lost our weekly EMA ribbon. Let's check out the monthly EMA ribbon. Yep, we did manage to find support in the monthly. We had a fake out recently. That was the March coronavirus crash, so that doesn't count because that's a black swan in my books. And the last time we fell below the monthly EMA ribbon was also a fake out. That was 11. Before that was 10, and before that was the 08-09 global crash. So this is really the big one to look out for, and this is what people are expecting right now. Now, if the S&P 500 did manage to find resistance right here at this level, if I zoom in again just to remind you what this looks like at this yellow box, if the S&P 500 does manage to find resistance here, and it also has EMA resistance here, which is interesting and deeply concerning, I must say, but if it does manage to find resistance right here, well then, yeah, we could be looking at quite a nasty candle moving down. This monthly candle has been somewhat of a reversal candle, showing us that the market is trying to push up, but again, only into a resistance area, and I think it's fair to say that things are not the strongest right now. They are still relatively weak anyway, and so just kind of keeping that in mind, I do want to at least, you know, be prepared for these possibilities where, you know, again, the only thing that I see going wrong for, you know, Bitcoin right now is if these big global markets are going to be in trouble, you know. And again, the last time this happened in some significant way was 08-09. Are we due for one? Maybe yes, if you're following conventional macroeconomics. But again, I just feel like all of this stuff is too predictable. You know, and by the way, that's why it's one of the reasons I don't talk about it, because I know I'm not, you know, an expert on this stuff. But I feel like I've got a pretty good holding on psychology of markets. I've been calling the S&P 500 correctly for years now. You know, and this is another occasion where I'm just telling you guys the same thing I told you guys when this big crash happened. I don't know if you guys were no, I'm sorry, not this one. It was one of them. I can't tell actually where, because it's such a small everything is so condensed. I'm feeling like it was the one before this, but I actually can't remember. But I do remember everybody was very worried that the S&P 500 would be crashing for, you know, to quite low levels. And again, the thing I was saying is just, look, I mean, when everybody is warning about the same thing, and, you know, you've got your news anchors talking about it, you've got your taxi drivers talking about it, your bloody pet dog talking about it. Again, I just don't want to give those things too much credit. You know, I want to stay level-headed. I want to remind myself that actually, you know, we're at support levels right now, or, you know, near them. We're losing a lot of bearish momentum. We're, you know, overwhelmingly bearish in terms of sentiment. The RSI, ladies and gents, hasn't been this low since the coronavirus market crash. So, you know, that is also something which, again, I'm just wondering how many people are actually paying attention to this stuff right now. You know, take a look at this. The RSI during that coronavirus market crash was at a reading of 33.52. I'm sorry, no, that's the current RSI price. RSI level. The RSI on the market crash was of coronavirus. Yeah, it was basically the same thing. It was 33.48, and today we're at 33.49. You know, again, so it's just a lot of things lining up telling me that, look, we're probably not getting that 10th weekly consecutive candle. Now, the final thing that I just want to make clear is that this is not me saying that, you know, we're definitely going to be triggering a brand new, you know, rally to all-time highs. I still think that's possible. The thing is, people just don't believe this, but Bitcoin flips biases really quickly. I mean, this is like a very annoying club. I'm sorry, a very annoying girl back in school. You know, that just flips her mind, just doesn't, you know, gives you mixed signals and so on. Bitcoin's the same, and it can, I mean, it's so you know, bipolar, and this is the thing, is it can just flip bullish so quickly, so suddenly, catching everybody by surprise. And I just don't want to be ruling that out. You know, I mean, I think it's still possible, but, you know, what I think is much more likely, or at least what I want to do is, you know, I'm still expecting that breakout, and if we do get that breakout, I just want to see how high it goes, right? We have quite a lot of resistance up ahead, and let's face it, we're not in a bullish market, right? So generally, again, like I said, support levels, I want to be a little bit more bullish, but resistance levels, which, by the way, are between 35 to 37, those are the two main areas that I'm watching. You know, that's where rejections happen. So I'm gonna start getting a little bit more bearish if we manage to rise up there, but that is going to mean that we could be looking at potentially a multi-week bullish rally that can take us up by 20% or so, and that's no small amount. I know it might sound like a small amount, but if you're trading this on a little bit of leverage, 5 times leverage with this kind of move is plus 100%. That's going to double your money. Now again, I'm doing all of this only on Bybit, so if you want to check them out, if you want to be able to get in on the action, guys, they sponsored the Red Bull racing team. Red Bull won. Like, I think that's just really cool. I mean, obviously they picked a good team, but I think it's a really, really cool time to be part of the Bybit family. And again, with what they've got going on, with all the features, the products, the fact that I've been using them for years and have been very happy with them as well. If you think that all sounds good, if you think it's just worth checking out and getting some free cash, then again, check out that link in the description down below. Make your first deposit. That's how you're going to get paid. You're going to get some free money when you sign up to Bybit using that link. But like I said, I just want to see if we get there. How do we get there? Are we getting there with a nice bit of volume? Are we, printing a particularly bullish chart pattern, perhaps on the daily time frame? These are questions that I need answers to if we manage to rise up. And of course, I'm going to get those answers. It's just a matter of time if we do move up. Obviously, we might not. Nothing is guaranteed. But if we do, I'm going to be watching it very closely to see if I think we're going to be able to penetrate these resistance levels and then potentially move higher, or if we're just going to find resistance, which is what we would expect, and then continue to drop lower. I don't want to be drawing any conclusions yet, but again, like I said, we're in that classic kind of pattern that does generally break out. There's a lot of things moving in our favor. There's quite a few things not moving in our favor as well. Volume is still overwhelmingly bearish, for example. I mean, this is a complicated chart, but from what I've seen in these markets over these years, and from what I'm seeing right now, from the sentiment that I'm seeing, look, here's the thing. I've said this to you many times before. I'm going to say it again right now. I don't like to agree with people in these markets, right? I don't like to be in agreement with everybody. I don't like to, feel like I'm fucking shaking everybody's hand, patting everybody on their back, stroking every motherfucker off to the same damn price predictions, right? I don't want to be standing in a fucking circle agreeing with everybody because I'm a trader. I'm not here to get my dopamine hits. I'm not here to get, my hopium hits and just feel like I'm part of a community or something like that. No, I'm here to make money. I'm here to position myself on the right side of the market, and that means generally being in disagreement with the masses, especially when the market is very emotional and at major turns. And that's the only note that I can end this video on. So if you have enjoyed this one, do me a favor and smash up the likes. I've just stepped away from a crazy party with the whole Bybit team and a bunch of the Bybit YouTubers. I'm going to go ahead and probably get back to that right now. So if you do appreciate me stepping out, making this video filled with all this passion and fire, then do me a favor and throw some fire on that like button too. Smash it up. Hit up the subscribe button as well. If you want to see more of this content, this is as real as it gets. Hit up the subscribe button, tick the bell, do all that good stuff. One more time, Bybit, bam, link down below. You can get some free money, and VIP, bam, also link down below. VIP is the first link in the description down below, and you're going to be able to ask me how to join if you are interested in what we're putting out. This is the best place to be if you want to get into trading, or if you're already into trading and you want to improve your trading. We've been able to help people at every single skill level. Just reach out and we'll show you what's going on with your pricing right here, which is actually discounted right now as well. So if you made it to the end of the video, you're going to be able to enjoy that. Anyway, guys, I hope you have enjoyed this one. You know what to do if you have, and I'll see you all in the next one. Bye-bye.